Well, hello and a warm welcome to our webinar this evening, Unlocking the Value of Silver. We're delighted that so many investors at the Royal Mint and those maybe new to the organisation and precious metals investing as well have been able to take some time out to join us tonight from their busy schedules to learn a little bit more about, namely, silver this evening. Our partner for today's presentation are the Silver Institute, who act as the global voice for expanding public awareness of silver's essential role in today's world. Now, before I introduce today's speakers, just a few notes from me. Today's webinar will be recorded and published on the Royal Mint's YouTube page. So if you want to catch up with any of the content from the slides, they will be published on YouTube shortly after the recording has taken place. We anticipate that both presentations this evening will last around 7 or 8 minutes. Then we'll have a live Q&A afterwards. So please do share any questions you have for our speakers today in the chat. We'll make sure we get around to as many of them as possible. If we don't get round to answering any of the questions, we will follow up any that are left unanswered. So please rest assured that your questions will be answered this evening and in the coming days as well. And of course, there's plenty more content that you can catch up on with the Royal Mint and, of course, the Silver Institute as well across our social media channels at Royal Mint UK. That's on X, Instagram, TikTok, and YouTube as well. So make sure you give us a follow on those and keep up with all the content that we have to share on a daily basis from across all of our divisions at the Royal Mint. I'm delighted to say that joining me on the call this evening is our Market Insights Manager, Stuart O'Reilly. He'll be speaking shortly. Stuart is the author of the majority of our very informative articles that are published on the Royal Mint's website. So I'd encourage you following this to go and visit those and have a look. There's some really insightful stuff there. But before that, we have President and CEO Michael Dorenzo here from the Silver Institute, and he's going to be reflecting now on silver's more recent performances over the last few years. Michael, over to you.
All right, thank you. Really appreciate this opportunity, and I thank all your, first of all, the hosts and those folks at the Mint, as well as all your attendees. It's an honor to be here before you this evening. So let's start off with looking at primary silver bullion coin sales by leading mints. We saw in 2020 to 2002, we saw a quite exceptionally strong couple of years for silver bullion coin sales, and that was across all mints throughout the world. I mean, you look at 120 million ounces in 2021. A lot of that had to do with the COVID years of 2020. And I've got a slide at the end of this presentation which shows you the dramatic rise of silver from the beginning of COVID to where we are today. But since 2023, silver retail investment has posted a sharp decline, and it's not being aided by any means by the VAT tax in Europe on silver, which does not pertain to gold. And that's extraordinarily unfair. And it's something that we're looking at the Silver Institute. It's not something that's going to be changed overnight, but it's something that we have our eye on. So when we got to the end of 2024, bullion coin sales were down about 53% from their 2021 peak. And they remained above the lows of 2018 to 2019. But nonetheless, we talk a lot. We have members that are in the industry that are dealing and selling coins and bars, and it's not a great time. And it's not reflected on the silver price. There's just so many other opportunities and assets that people are putting their money into. And our Fed in the United States is not lowering the interest rate, and that Fed rate has remained constant. We had a couple cuts last year. We foresee a few more later this year. We'll just have to see how the economy is rolling as we move on. Next slide. All right, now you're, and this really does tie back into that VAT tax. They had the largest decline in percentage terms from 2023 to 2024, some 67% in 2024 versus 2021. It's really Germany where their VAT tax is really impeding the ability of investors to get into silver bullion because, as we know, tariffs, taxes, whatever you want to call it, are an impediment to, at least on the silver side, to safe haven investments. The rally we've witnessed recently of above $30 has definitely encouraged some profit taking, and selling back by retail investors was somewhat limited, especially when you compare that to gold, which is, of course, hitting daily all-time records in the last 3 months of this year. Investment in silver seems to have bottomed out in late 2024. Again, that is almost directly 100% related to the VAT change on not only in Germany, but also in Poland. So we have some impediments in Europe that are confronting the overall global sales of bullion. And I think the mints are seeing it, as are the dealers, not only there, but here. Next slide. So if you take the US, for example, we had a very stable 2023 with our Silver Eagle coin sales. One of our consultants is Metals Focus. They produce our World Silver Survey, which we will be releasing on April 16th of next month. And we'll post that to our website. It's considered by many to be the unique, authoritative book on the silver market. And that'll be available, as I mentioned, online at no cost in PDF format. So 2025 kind of ended where 2024 or began where 2024 ended. It's a weak market here. US mint sales for January and February year on year were down some 31%. That's not a good sign. Retail bar sales were also exceptionally weak over that particular time frame. However, we're starting to see a little bit of a comeback here in March. It's modest. Most of that is due to concerns over Trump's tariff policies and what this could mean down the road for U.S. inflation. And yesterday, if you saw our Fed Chairman Powell talk about their concerns about inflation, their concerns about the global economy, specifically targeted toward Trump's ambitious tariffs that he is unloading and unleashing on Canada and Mexico, which are the two largest exporters of silver bullion to the United States, both in doré form and other forms, is having an impact already, even though those tariffs have not taken place. April 2nd is going to be a big day because we're going to find out what this really, really does mean to the markets when it comes to gold and silver coming in to the United States. Next slide. So besides physical investment in bar and coin form, we'll also see investment in what we call exchange traded products. Some call it exchange traded notes. But nonetheless, Q1 2022, we started to see our first withdrawals from ETPs. And a lot of that had to do with the very low interest rate. People were getting better returns in the stock market, the Dow, other index funds, the S&P in particular. And with the cuts of last year, we started to see that moderate a bit. We've seen in Q2 of 2024, which we're about to enter, or actually 2025, but in 2024, we had dovish interest rate expectations. Obviously, ample geopolitical and economic uncertainties, and that encouraged portfolio diversification into hard assets such as silver and gold. But we saw it was underpinned really by India and Europe. Um, India is relatively new to the market when it comes to exchange traded funds or products. They're 2 years old, but they are really making inroads in terms of getting their citizens to invest in silver through the various ETP products, whether they be digital or whether they be something similar to our SLV or our PSLV, which is here in North America. We've seen somewhat of an outflow in ETPs following Trump's election victory, but we do call for a recovery later in the year in exchange traded products. And we think it'll be marginally lower than last year or marginally higher than 2024. It's not going to be a big number in either direction. Next slide. I wanted to show this to you. I saw this over the weekend, and this is a chart from MKS PAMP as well as Bloomberg. You look at from March 15th, 5 years ago, to March 15th of this year, Bitcoin has increased over 1,000%, almost 1,500%, but silver price has increased 168%. And the silver price today is about 18% higher than it ended last year. So the silver price is doing well, and it's doing well for a number of reasons. It's following gold. Okay, there's a tailwind there. It's following gold to a certain degree, although the gold to silver ratio is rather high. But how can it not be when you have almost $3,100 gold per ounce? So, but there are other socio-economic reasons where people are investing in silver. And we think it's going to be a good year for the market. We're projecting another market deficit in terms of overall supply plus demand. It'll be the 5th year of an annual structural deficit in the market. Now, that's not going to last forever, but in 2025, it will continue. And we think that when you look at jewelry, other forms of industrial demand is really going to be another record year with over 700 million ounces going to that particular category, which of course is led by the electronic and electrical aspects of that category. And that's primarily being driven by the solar panel installations and the greenification of the world with respect to electric vehicles, the charging stations, the entire infrastructure which is used to support those two endpoints. So with that, I'll turn it back to our host, Toby, and I'm happy to answer any questions.
Thank you very much, Michael. That final slide's incredible. Silver's performance since the beginning of lockdown. And just a reminder, of course, the Q&A chat is open, so please do start filtering through any questions you might have for Michael and Stuart as well. So Stuart, of course, is our market insights analyst, and he's some quite exciting news. Obviously, Michael touched on VAT there. And one of our products, of course, now moving forwards is going to be treated slightly differently from a VAT perspective. But I'll hand across to yourself, Stu.
Yeah, thanks, Toby. Obviously, the Royal Mint is an incredibly old organisation. It's one of the UK's, well, it is the UK's oldest company. It's one of the world's oldest companies. And right from our very foundations, we've been working with silver. So the coin you see at the top there is a penny struck in the reign of Alfred the Great in the year 886 AD. And it's actually made of silver. And that's the coin that we date our history back to. That's the starting point of the Royal Mint. So from that entire time, from 886 until the present day, we've been working with silver and kind of honing our skills and craftsmanship in the silver space. And of course, being the Royal Mint, our primary purpose has always been to produce the circulating coins for the UK. Which again we've done over the centuries, and right up until 1947, just after the Second World War, circulating coins actually included silver. So you had silver coins in your pockets. Obviously, we don't do that anymore. You don't have silver in the 50p's that you're spending. But you can still buy silver from the Royal Mint in the form of commemorative coins that celebrate events like Jubilees and the coronation. In medals, we still make medals for military, for long service, for civil servants, for example, and also obviously in the form of silver bullion. But more recently, we've actually been working with X-ray silver. So this is silver that is recovered from the old X-rays that the NHS or other kind of X-ray providers are getting rid of, and we extract the silver from that and turn that into jewelry. And in fact, the image on the right-hand side there, the bottom right, is the Cross of Wales, which is the cross that proceeded through Westminster Abbey ahead of the King on the day of his coronation, and that was actually made with silver from the Royal Mint. So you can see we kind of have a vast range of uses for silver and lots of things that we can do with it. Go to the next slide, please. So I won't bore you with the full kind of 1100 years of history that we've had with silver. I'll just talk probably about the last kind of 24, 25 years since the start of 2000. And as Michael mentioned, the gold-silver ratio is historically pretty high right now. So what this is the total number of ounces of silver that it would take to buy an ounce of gold, essentially. How many ounces of silver is worth the same as an ounce of gold? And what you can see from the graph at the top there is the average since the start of the year 2000 is 68. Where that ratio currently sits is at 90. So some people like to use it as a bit of a measure of value. Obviously, what it's measuring is only gold versus silver prices. It's not, measuring value in any other metric. But it looks like silver is undervalued versus gold according to that ratio. And obviously, that's not a predictor of where the price might go, but some people like to use that metric to kind of inform their thinking. And in the bottom graph there, you can see that silver's been on a bull run for quite a while, and you can see towards the right of the graph there, the last year or so, particularly strongly, the silver price has rallied. But actually, you could go right the way back to about 2016, and you can see that the trajectory over that time frame is broadly upwards. And silver's produced some pretty good returns. So if you were to go right back to the start of 2000 and right up until right up until the end of 2024, the compound annual growth rate of the silver price is over 8%. So that's an average of 8% growth per year over that time frame. Obviously, it fluctuates. You can see the big spike there in 2011, 2012, but that's the longer term average. And then year to date, in pounds at least, we're up 11%. And if you think about where the price might be headed going forwards, a lot of the talk that we hear from the investors and the industry experts that we speak to is around green technologies. So silver is very heavily used in solar panels because it's reflective. It coats solar panels. And it's also increasingly used in things like electric vehicles. So there are some manufacturers out there who are putting increasing quantities of silver into their electric vehicle batteries. Potentially up to a kilo, I think was a story in the media recently. And if we are to continue on the kind of transition to green energy and electric vehicles, we might expect silver demand to increase in line with the increasing use of solar and electric vehicles. You can go on to the next slide, please. And so some of the trends that we've seen at the Royal Mint kind of mirror those broader trends. So sales of our digital silver product in the last quarter of 2024 were up 848% compared to the last quarter of 2023. So a huge increase in interest and demand for that digital silver product, which I'll touch on in a little while. The total weight, so if you added up all of the ounces of silver that the Royal Mint sold through its website last year, that total weight was 18% higher than the total weight that we sold in 2023. We've seen some hugely successful product launches. Most recently probably was the antiqued Odin bars that some of you hopefully got your hands on, where it is silver still, but we've treated it with a chemical, so it's got a antiqued, aged kind of effect, and it had a limited mintage of just 500 bars, but that sold out extremely quickly. And if you were to try and buy one on eBay now, you'll pay kind of many multiples of the price that you would have paid if you were lucky enough to get one from the Royal Mint. But the preference is very much shifting towards UK bullion coins. So if you switch on to the next slide, you'll see why. It's the top point on this slide. It's capital gains tax. So the last few budgets in the UK have reduced the annual exemption threshold for paying capital gains tax, and also recently increased the rates of capital gains tax. And because UK coins are exempt from capital gains tax because they are legal tender, it has led some investors to look more towards coins as a way of investing tax efficiently in silver. And the way that people tend to do that if they're thinking about coins is more often than not through the Britannia that you can see on the left-hand side there. Britannia is our best-selling silver bullion coin. It is also the most popular silver coin in Europe and East Asia, or certainly was in 2024. And we hope that will continue into 2025. And there's a wide range of sizes available for Britannia coins, right from a tenth of an ounce of silver, so that's roughly £2.60 worth of silver, right up into a kilo of silver. A 1 kilo silver coin is pretty impressive. It's about £830 worth of silver content. And the great thing about these coins is the security features. And because silver is it is the most reflective metal, the security features on a silver Britannia are second to none. You can see just about behind Britannia there, that textured surface. If you move that in the light, it gives the impression of waves behind Britannia. And then in the bottom left of the coin there, you can see there's a latent image, which again, if you move the coin under certain lights, you'll see a trident and a padlock. And as I said, the reflectiveness of silver means that those features work incredibly well on silver Britannia coins. If you switch to the next slide. So if coins aren't your bag, then you might be thinking about silver bullion bars. And bars can be split into two categories. So you have minted bars and you have cast bars. So in terms of minted bars, the ones that the Royal Mint currently produce largely look like this. This is the Britannia range, 100 gram, 10 ounce and 100 ounce bars. It's a way of investing in silver in kind of larger quantities, larger weights of metal, if you like. And they really are impressive to hold. So the 100-ounce silver bar is over 3 centimeters thick. It surprises a lot of people when you see it, the kind of chunkiness of that silver bar, if you like. It's something to behold for sure. If you switch over to the next slide. The other way, I guess, if you were less interested in the design, would be to invest in something like a cast bar. So these two options on the screen here are the 500 gram cast bar and the 1 kilo cast bar. They carry a slightly cheaper premium because you're benefiting there from the economies of scale and the lower production costs. So if you imagine the process involved in creating a cast bar is a lot less involved than the process in creating a neatly finished minted bar. These bars come with a serial number, there's an assay certificate with them, and actually they're made from recycled metal. So they're made from metal on our site that's either been scrapped or damaged or is no longer usable for what we wanted to use it for, and we turn that around and make these cast bars out of that recycled metal rather than sending that off to a refinery to reprocess. You can go on to the next slide, please. And the product I mentioned at the start, the 848% year-on-year growth product, is this digital silver. So it says digital, it is physically backed. So all of that silver does exist in the Royal Mint's vault, and it's in the form of 1,000-ounce silver bars. And similar to the cast bars, you're benefiting there from the economies of scale and the low production costs of producing these 1,000-ounce bars. But you can actually buy it from £25. So you get direct ownership of a sliver of a silver bar that backs this digital silver product. And you can see the fees there, 1% to buy or sell it, and it's 0.5% plus VAT per year on the storage charge. And that product is a VAT-free way of buying silver. You can't take delivery of it because it's in the form of 1,000 ounce bars, but you benefit from the exposure to the silver price. If you switch to the next slide, please. And then finally, this is a way of investing in silver that's not purely about investing. If you're also interested in collecting, or you just want to enjoy that journey of silver stacking, these products might be worth a look at. So these are themed silver bullion products. You can see a range of different designs there, from the Odin bar that I mentioned earlier, which is part of a series of Norse gods, Star Wars. There's a Queen's Beast completer bar in the bottom right there. And really, that's just to add a bit of variety and keep you enjoying that silver stacking journey. The other advantage, I guess, is if you were to sell these products privately, there is a potential that you could earn a higher price on the secondary market because of the design and the aesthetic value. But that obviously depends on who you sell it to and the value that that collector places on that product. But it's a kind of semi-collectible, semi-investable product. So those are, I think, the options there for what the Royal Mint offers, certainly in terms of investing in silver. I'm going to hand back to Toby.
Thank you very much, Stu, and thank you, Michael, as well. We've got a couple of minutes left, so we'll have a couple of questions before we depart. Of course, you can catch up, like I said, on YouTube and across our social media channels after this. This is recorded. We'll start with you, Stu, and this was a question actually that was submitted by somebody that couldn't necessarily make the webinar this evening. Michael obviously mentioned Trump tariffs earlier on, as did yourself. We've had news of large bullion banks settling futures contracts in cheaper physical gold from London to New York, which has seen billions of pounds worth of gold bullion being flown from London to New York. Do you see that having an impact on the silver bullion market as well?
Yes, it has. It's definitely had an impact. I think you probably just don't read about it as much in the headlines. I think gold is the metal that tends to get all the media attention. But exactly the same trend is happening with silver as it is with gold. It just doesn't affect the Bank of England, I guess, because the Bank of England doesn't store silver. It's just the commercial vaults. But we're certainly seeing kind of huge quantities of silver leaving London or other kind of bullion centers around the world and entering the United States. And the play there is arbitrage trade largely, but also people trying to get ahead of any potential tariffs that might come in and then make that purchase of silver more expensive in the future. So the theory being you buy it now and then you don't have to pay the tariffs later because you've got your demand for silver. We're kind of isolated from that a little bit in the Royal Mint. So we're not part of the London clearing system in the same way. So we store all of our customer silver and our own silver on our own site in South Wales that isn't part of that London clearing system. So we're not seeing, lorries full of empty lorries showing up at the doors wanting to kind of carry silver off to New York. Some of the London vaults certainly are. And I think that can probably give some reassurance to our own silver investors that we are not part of that system. It's a very legitimate and system that's experiencing sort of extraordinary demand. We're just not part of it. So we're kind of insulated from that, if you like.
Fabulous. Thank you, Stu. Of course, I look after the wealth management team at the Royal Mint. So if there's any more sort of specific questions on the vault in particular, please do reach out to our account management team. All the details are in the invest section of our Royal Mint website. And Stu, in fact, obviously wrote an article to that effect more recently under the market news section. So please visit that area of the website if you want a few more details on that. We'll have a question for you, Michael, if you don't mind, just before we end the webinar this evening. We'll take the first question. In fact, there's a few others, and we'll make sure we get back to everybody that has submitted a question into the Q&A section. But Michael, if you compare one of the best years for retail silver, what were the conditions that contributed to that? I find it fascinating with the projected silver deficit that silver investing or buying hasn't improved. Thoughts on factors that are associated with the difference?
Sure. Thank you, Toby. Well, if you look at some of the best years of silver retail investment, you're looking at really strong geopolitical events. And let's just start with COVID. Okay. We had the US government basically flatlining interest rates, quantitative easing. We had people who were looking to put their money into other vehicles besides the stock market, which wasn't performing well during that time period. And they went to silver and they went to gold and other precious metals. So those are the types of events that stimulate a rather abrupt reaction by investors into the silver market. What we're seeing today is we're seeing a very frothy US stock market, which many have claimed is overbought. And we've seen in the last few weeks some very negative days in that market. But when you look at gold and silver today, you're starting to see a price reaction to those events. The party on Wall Street will not and cannot last forever. There's only so many shares of Nvidia that are available to purchase. Okay. AI is not the panacea to the world, and it's not the panacea to your individual stock market. Bitcoin, other alternative investments, such as any crypto, they may have seen their high points. Okay. Personally, I just don't see any value in investing in crypto. It's not something you can touch, feel, or trade easily. So I think the best, when you compare that to the other part of the question regarding the silver deficit, I don't think people are making investment decisions on a projected deficit with respect to silver. They're investing in silver for several reasons. And the first is that it is a dual metal, has both an industrial component and an investment component. People who are investing in silver today from the investment side are backsiding from the gold trade, or they're long-term silver buffs. And a lot of folks are looking at the potential industrial uses of silver. And as Stuart mentioned earlier, the electrification, the greenification of the world all requires silver. If it has an on and off switch, there's silver in that end use. There's just no better source of an electrical conductor with respect to metal. It is silver. So that being said, we think the future is extraordinarily bright down the road. But again, I don't think people are looking at the deficit as a silver. There are a lot of above ground stocks of silver. We just put out a report last month on price sensitivity and the mobilization of these above ground stocks. And as Stuart and Toby have alluded to already, we're seeing significant, dramatic drawdowns at the LBMA. The shipments that are coming into New York, we're seeing in exchange for physical, and we're seeing high lease rates that the bankers are having to provide with respect to lending gold to end users or other banks. So the market is tightening. It's a good sign for silver, and we'll know more next April or this April when we put out our report on the market on the 16th.
We certainly will. Thank you very much. A really positive note to end on. And as I mentioned, of course, there's information on the Silver Institute website as well. Michael is, of course, CEO and president for the Silver Institute. Thank you very much to both of our speakers. You can watch this back on YouTube and, of course, follow us on our social media channels at Royal Mint UK. And please do not hesitate to get in touch with any one of our account managers in our account management team if you've got further questions that you need answering. But we'll make sure we get back to everybody in the Q&A section as well. Thank you very much to our speakers, and thank you again, everybody, for joining the webinar tonight.